Hi, I'm Evaldo Albuquerque, editor of FX Breakout Alert. If you are new to the Forex market, I know that it can be hard to understand at first the basics of this market and how you can actually make money when currencies move. So in this short video, I'll show you how to read a Forex quote and how you can actually profit when currencies move. The first thing you need to understand about the Forex market is that everything is relative. Currencies trade in pairs. So when you buy one currency, you're selling another currency at the same time. And that's the biggest difference between the Forex market and other markets, such as the stock market. When you buy a stock, for example, you'll make money if the price of the stock goes up. And when you short a stock, you'll make money if the price of the stock goes down. In the currency market, if you want to buy a currency, you'll buy a currency against another currency. So let's say if you want to buy the euro, you have to choose which currency to trade the euro against, because the euro could rise against the dollar but fall against the Japanese yen, for example, at the same time. And that's why currencies trade in pairs, because when you buy one currency, you're selling the other currency at the same time. So here's an example. We have the USD and MXN pair, and that's the US dollar Mexican peso. And here's the quote, 12.6616, and that means that $1 buys 12.6616 units of the Mexican peso. So in every currency pair, you'll find the base currency, which is the first currency, and the counter currency, which is the second currency. So when you buy a currency pair, you're basically buying the base currency against the counter currency. And when you sell a currency pair, you're selling the base currency against the counter currency. In this example, if you buy the pair USD MXN, you are buying the US dollar and selling the Mexican peso at the same time. So you're basically betting that the US dollar will rise in value against the Mexican peso. And if you sell USD MXN, you will be selling the US dollar and buying the Mexican peso at the same time. So you will be basically betting that the US dollar will lose value against the Mexican peso. Now let's take a look at a Forex quote. And this is actually a screenshot of one of the Forex brokers. So if I want to, and this is the euro pair. If I wanted to buy the euro against the US dollar, I'll just click buy and I'll buy the euro at 1.3331. And if I wanted to short the euro against the dollar, if I wanted to bet the euro would fall against the dollar, I'll just click sell and I would sell the euro at 1.3330. In the Forex market, we use pips to measure the movements of the currency pairs, and one pip is the last decimal place of a quotation. In this case, is this last number here. So if I buy the euro USD at 1.3331 and the pair moves to 1.3332, I made one pip of profit. Most currency pairs have 4 decimal places. The only pair that has 2 decimal places is pairs that include the Japanese yen. All the other pairs you will find 4 decimal places, and the last decimal place of the quotation is the pip. And that's how you measure movements in the Forex market. In this case, for example, if you sell the euro at 1.3330 and the euro moves down to 1.3329, you also made a profit of 1 pip. Now let's take a look at a recent trade that I recommended to my subscribers to my FX Breakout Alert research advisory. So we are looking at a daily chart of the pair USD MXN. So if I wanted to bet that the dollar would rise against the Mexican peso, I'll just buy the pair USD MXN. But in this situation, we actually went short the pair USD MXN because I was expecting the Mexican peso to appreciate against the dollar. In other words, I was expecting the dollar to lose value against the Mexican peso. So I recommended to my subscribers to short the pair around 13.72. So we went short here and we closed the trade a few days later around 12.9000. The difference between those two values, 13.72 and 12.9, results in 8,200 pips of profits. And that's how you measure gains in the Forex market. We went short here and you closed when the pair was trading much lower. And at this point that just means that $1 was buying 12.90 units of the Mexican peso. So $1 was buying less units of the Mexican peso because the dollar lost value against the Mexican peso. And that's how you can make money in the Forex market. In the second part of this video, I'll show you how to actually convert these pips to dollar amounts and how you can actually place a trade with a Forex broker. Thanks for watching, and if you'd like more information about FX Breakout Alert, please see the link below. Thank you.